I'm excited to have you for our panel. Scoot over here before lunch. I think that this is a great panel to introduce you to because some of you might remember what happened in 2008. There was this thing called the Great Recession, and a lot of that was circled around mortgages, mortgage-backed security on Wall Street. So you might wonder, well, how does blockchain fit into that? We are going to discuss that a little bit in this panel and hopefully get some real use case of how blockchain can be used in real estate today. So just a quick, you know me, my name is Heidi, but I also I co-founded a company in mortgage lending, peer-to-peer mortgage lending using blockchain technology. So that's where my experience comes in. And if you guys don't mind, just quickly introducing yourselves, and then we'll dive into the questions.
My name is Lloyd, and I'm the co-founder of SmartRE. We are a fractional real estate platform that allows homeowners to liquidate equity in their homes without taking on debt or be sensitive to interest rates. And then purchasers from around the world can buy into those portions at ticket prices as low as $1. So we use the blockchain to record and verify all the transactions. And as far as we know, it's one of the first companies that that focuses on residential real estate. And my background is I got my master's in computer science at UCLA. So it's good to be back here, even though I was more South Campus. and this is my third go at a startup. The first one was local search. Back in the dot-com days, we were way too early. And then the second one was in semiconductors, bridging Asia and US. And that one actually went public on the NYSE, over $8 billion. And so this one, it's a brand new world, so in the blockchain. So we're very excited about it.
Hey everybody, I'm Chris Eberle, down from Silicon Valley. Personally, professionally, I have been in the Valley scene for about 8-9 years. Worked at a few different startups, including Meebo and Federated Media. And then most recently was with a company called Facebook for a few years. Left Facebook last summer to go all in on blockchain. Now work with a few different companies, but in an operating role with SwarmFund. So with Swarm, we launched the first security token blockchain at the end of January. So our security token blockchain is built on the Stellar protocol, if that's a thing you're familiar with. And then the Swarm token itself, which we use for governance and gas for the platform, is an ERC20 or Ethereum token. So we've just launched. We are focused on tokenizing real-world assets, so connecting people to invest their crypto or their fiat into assets that they might not otherwise be able to put their funds into. And we'll talk a little bit more about that, I think, as the panel goes.
Great. Hi, I'm Piper, and I am the CEO of the CryptoRealtyGroup. I'm kind of the boots on the ground, so to speak. I help buyers and sellers transact in cryptocurrency.
Great, thank you. And Chris, you said help people with fiat currency. Some of us are new to this. Do you mind explaining what fiat currency is?
Yeah, it's one of those things that folks in the room that have gotten a bit into this space, the learning curve is steep and quick, and then it's like you start talking about stuff and people don't know what you mean. Thank you for asking me to clarify. So fiat is just old school currency, US dollars, euros, things like that. So our platform is focused on bring whatever currency you want. We're starting with Bitcoin and Ether, and then dollars and euros.
Great, thank you. Yeah. Awesome. So why don't we start with you, Cyber? Let's start with you, Cyber. Piper.
I like that. I think I'll change my name.
Let's start with you, Piper, to talk a little bit about your company and some of the transactions you've done. So we've seen that there has been, believe it or not, transactions where people are using Bitcoin to buy homes and buy real estate. And we're seeing most of that activity happening here in Los Angeles. So Piper, do you mind talking just a little bit about what this typical Bitcoin purchase of a home looks like and some of your experiences with that?
Okay, yeah. There really isn't a typical one yet. I've done 5 so far. The buyers have mostly been in the space, really heavily involved in either cryptocurrency or the blockchain, or both. The dollar amounts, I mean, the properties have actually been kind of like the higher end dollar amounts, and they've been all cash, going from Bitcoin to fiat.
And when you say higher dollar amounts, what are we talking about?
Not your $250,000 condo. It's my lowest, I believe, was 1.8, and my highest was about 3.5.
And has it been all in the in some sort of Bitcoin, or have they used partly fiat? Or
No, it was all in Bitcoin. Yeah, Bitcoin to fiat transactions.
Great. What would you say were some of the disadvantages of using cryptocurrency today?
There's the disadvantage right now is adoption and fear. I believe still a lot of people are afraid of it. They're afraid of being scammed. They're afraid of the volatility. The reason why the main reason why I've done the conversions is because nobody wanted to take the Bitcoin because they didn't know anything about it. But calming their nerves a little bit, to say you're not going to see the Bitcoin. Don't worry about it. You're going to get the full amount of the transaction in fiat, no problem. So that kind of eases their minds a little bit. And also, like I said, the volatility. That's the burden of that is on the buyer. So if it's $1 million transaction and Bitcoin goes down at the close of escrow, they're obviously going to be paying a little bit more in Bitcoin. But in my experience, people are just kind of happy to be buying in Bitcoin anyway, so that doesn't really faze them.
So Piper, do you mind walking us through one of your transactions? So I've got
the hard one or the easy one?
some Bitcoin, and I want to buy a house. I pick up the phone and I call you, and what happens?
Okay, well, so far, we have used 2 vehicles for this. We've done 4 of them using BitPay, which is, if you're not familiar with BitPay, they are a payment processor. They take the Bitcoin and they convert that into fiat, into a wire transfer to escrow. I do have an escrow company that is set up to accept BitPay, so that makes it a little bit easier. Before that, we had to either do it, make the transfer directly to the seller, or use a third party. And that hasn't been really a problem either, but it does help to have escrow involved. And the fourth one that I did, there is a bank out of London that will accept the cryptocurrency, and proof of funds is kind of a big deal. We have to be able to prove that we can afford the house, and they're able to take the Bitcoin and convert that to euros, and then also provide a letter. And also make the transfer themselves. So that makes it a little bit more seamless, and without the 1% that BitPay charges. So that, in essence, is how the currency is transferred. Everything else is done through escrow, basically, and they take care of all the paperwork and everything else.
So with the volatility of Bitcoin and cryptocurrencies in general, why in the world would anybody want to buy property with Bitcoin?
With Bitcoin, well, a few reasons. Like I said, the buyers that I have worked with got in very early, and they had a ton of it. Bad problem to have. So they were happy to take that, and they have to put it somewhere. They can't, they want to be able to exchange that into tangible assets. So that is, good for them. And I don't know. I mean, with the new, IRS tax laws and everything, there is the taxes on the capital gains. So you're going to get taxed on both sides no matter what. But again, that doesn't really seem to bother my buyers because they have so much Bitcoin that they're just, like I said, they're happy to buy with it.
Gosh, must be nice.
I know, right?
Yeah, of course.
I think especially if you look at the crypto markets of just a few weeks ago, and lots of red and pain. People are looking. If you look at people putting money into Tether, or trying to, despite sort of mixed reviews, like people are sort of crying out for ways to de-risk their portfolio and sort of mitigate the volatility. Volatility is fantastic when you're 10xing, and it's brutally painful when you're not, right? So I think that's probably, I would imagine, for Piper's business, among the reasons why folks want to bring crypto into real assets.
Got it.
Yeah,
Great.
Totally.
So what other major roadblocks are there in your world as you see today?
Roadblocks. I have yet to do a crypto-to-crypto transaction. There was one that was done a few years ago before it was even really on the map, and the roadblocks that they ran into were title transfer and city taxes. The city stepped in and said, hey, we want taxes on this. It has to be recorded in fiat. So the buyer and the seller exchanged $1, and they said, no, that's not good enough. We want taxes on the actual amount that was, right? And so a lawsuit ensued, and it went on for a little bit, and the seller finally offered half of what he was supposed to owe on the city transfer taxes. So we don't have an answer for that just yet, but I'm willing to try.
So that's a startup idea.
Exactly.
Right, okay, great. So I'm gonna switch gears just a little bit now to the gentleman over here. I wanted to ask you guys, something that I love about blockchain is that it's a tool, the best we've had so far in history, that democratizes accessibility to knowledge and wealth, right? How do you see Swarm and how do you see SmartRE making this a possibility for individuals? We'll start with you, Chris.
Cool. Yeah, I mean, democratizing investing is the primary mission of Swarm. We are starting towards that mission. I mentioned we launched just in late January, and we're focusing on private equity, which is typically a very exclusive area of investing, right? You have to have a whole bunch of money and be in sort of a special club to be able to make private equity investments. And so we've started by bringing assets onto the blockchain and tokenizing those assets for, ultimately, we hope everybody to be able to invest in those, not just the 1%. We're limited in the ways that we can do that in the US today, so it's not immediately democratized, but fractional ownership of those things, no minimums, immediate tradability is really what we're focused on, and that's really, from what I'm aware of, only possible on the blockchain.
Great.
And for us, it's we're focusing on residential real estate. And so you look at the US, it's the biggest and safest real estate market on the planet. So a lot of people overseas, they want to invest into the US real estate, residential. But in the past, it's always been a big ticket. Just to put down 15 or 20%, it's not something that everyone in the world has, right? We live in especially in SF Bay Area, LA, and Manhattan, a lot of people have the funds. But if you look at people overseas, even in London, in Berlin, in Tokyo, bringing 200K into the US is not that easy, or just to have the 200K. So we are allowing people to buy, residential properties down to $1, and which opens up a huge segment of the world's population to get into the real estate, right? I mean, when I was in college, it's almost impossible for me to even conceive of getting into real estate because I was a poor college kid. There's, $1 I can afford, but 10,000 or above, it would have been difficult.
So do you mind just walking me through that? What would I do? Maybe you're not set up now, but when you are up and everything's ready to go, I want to invest $10 in real estate. So how does that work? I go to your website and... Yeah,
you download the app, and it's very much like any other e-commerce. We've set it up so that it is like any other e-commerce app, because a lot of people, just like HTTP, right, the web, people don't really care what's behind the scene. They want to make sure that everything's safe and that you are indeed on the blockchain. When they want to see the proof, it is there. Everybody can go, because we're using Ethereum, everyone can go and see the transactions recorded and all that. Mm-hmm. And so you just go to the app and just, click around. And if you want to buy with crypto or with fiat, we accept both of those.
And where do you get the real estate?
So it's people, the homeowners, who want to liquidate some of their equity, right? So right now it's just home equity loans or reverse mortgages if you're over 62, both of which bring on debt and interest rate issues. But we're allowing people to just sell it. And in the future, if the homeowner wants to buy it back, they can do the same thing. They can do it if they want, but they don't have to.
Chris, do you mind walking us through that step too? So what do I do? Get online, I look at Swarm, and then how do I earn back or get my return on my investment?
Yeah, sure. So you can go onto Swarm today, www.swarm.com. And you sign up for an account. You have to go through a KYC AML process. That's a know your customer, anti-money laundering, basically submit your identification to avoid this sort of storyline about crypto and black tar heroin and those kinds of things. To make sure that you are who you say that you are. Some additional checks if you are in the US. But then after that friction, you can evaluate the assets that are available on the platform. Today there are two. We're just getting going, but one is a distressed real estate fund. One is called the Silicon Valley Growth Fund, where you can buy into pre-IPO tech stocks. You put today your Bitcoin or your Ether, in the future additional currencies, into the platform and commit it against those funds. Once those funds reach a minimum, which should just be $1 million, then it's locked and it goes sort of like a Kickstarter campaign, but with real established businesses. And then you own a fractional share of that asset. You can either immediately trade your shares, like as if they were stock, to other people on the platform and recognize value that way, or look at it as a way of sort of taking your money out, and those shares will have a value. Or as a shareholder, you'll enjoy returns from those assets when they come in. The returns are different by asset, but we expect quarterly-ish returns, not like, hey, maybe they'll happen every quarter, but with something like a distressed real estate fund, every quarter there'll be payment of profit back to token holders. It'll look a little bit different for other things that come onto the platform.
And so how do if I have an asset, distressed or not, then how are you finding those assets?
Yeah, this is one of the sort of fascinating parts of this for me. I mean, despite the name, we're not a fund. We're a vehicle for the swarm, for all of us to fund things. But to get that kickstarted, we become curators for now, right? We need to find legit businesses, establish profitable entities across different verticals, and bring them onto the blockchain and tokenize them. So we're really doing a lot to find, vet, and handhold those things to bring them on. But the design of the platform, and actually if you go check it out, you can actually see the UI is there today, but we're sort of holding back to make sure that only legit projects come in. But you can tokenize your asset today by going onto the platform and providing essentially a prospectus on what it is that you are trying to raise money for. And again, we're focused now on existing profitable businesses, or projects that want to raise additional capital to do more of what they are doing or go in a different direction, but really already have credibility they can show to people of what they're going to do. But you would come through an intake process, provide the background and financials on who you are and what you've done, what you're expecting to do with the capital, how much you want to raise, and then things like the return schedule to folks, and then you pitch and get after it.
Great, awesome. So I'm going to bring it down to, I love the vision and what you're doing, bring it down to today. You're in this space, blockchain. People hear blockchain and they might think cryptocurrency, ICO, mining, it's all over the place. How do you get somebody who owns real estate and they want to turn to you? How do you get somebody who wants to sell or get investors in their real estate today on your platform? What are some challenges?
So on the sell side, because we have a community, and so a lot of people, because the crypto world is getting pretty hyped, and so a lot of searches, we haven't even done real SEO, so a lot of searches end up with us. Oh. And so the homeowners just approach us, email us, and say, hey, how do I start this? And we send them an application packet. And they have to get an appraisal. We got to make sure. We know pretty much where the high demand areas, the values, approximately in each, pretty much down to the street level. And so if they come in and then they have to give us an appraisal. We got to make sure they're equity positive, 51% or above. In the future, we'll probably allow people to put more than 49% onto the platform. But right now, to be more conservative and to safeguard our buyers, we want to make sure that the 51% rule is still there. And so make sure the equity positive, the credit checks, and just make sure, sort of like KYC as well on the sell side. And on the buy side, which, thanks for bringing it up. Our buyers, even though you can sign up and start perusing all the properties, in order to buy, we have to make sure we know who you are. So you have to send an ID, all the necessary information in the KYC, so that, especially, if you're buying with crypto, we need to know who you are.
Great. How about you, Chris?
Yeah, we think about a few different audiences. I mean, similar to what Lloyd was saying. Like, there's a sort of a buy and a sell side to the marketplace. For, let's call it the everyday investor, for any investment, particularly anything in the crypto space. I mean, it really is about research and education, and maybe that sounds obvious, but it meets so many folks that have not yet been able to sort of take the time to go down the rabbit hole that I'm sure most folks in this room have done or are doing, to really understand this stuff and how it works and what the heck a blockchain is and why it makes sense. And so at a basic level, even set aside Swarm, and for any project that people are looking at, understand what it is. Should this thing even be tokenized? Because a lot of these things, it's tokenization for tokenization's sake. And then who is the team behind it? Where do they come from? What have they done? What have they delivered? What's the diversity of their skill set and their approach? And then to look at us in the same way, and then look at what your money is actually going to go into. For us, in some ways, I think it's a little bit easier for folks to wrap their heads around because it's real world businesses, right? And you evaluate them in the same way that you would evaluate sort of a traditional investment or a stock, right? What is this entity? What has it done in the past? What are they trying to do? What assurances do they have, or do I have, or what comfort do I have that they'll actually be able to do that? So from a buyer's perspective, I think maybe it's intuitive, but I think it's really about really diligenced research. On the other side, we're actually talking to a lot of folks in the private wealth community, like family offices and such, right? Have very large pools of capital that they are already able to invest into things in the categories that we're bringing onto Swarm, but with a whole bunch of restrictions and inflexibility, right? You have to have massive amounts of minimums. There's only certain windows in which you can go and make your investment, and your capital's locked up for a very long time, right? There's no liquidity, zippy liquidity, right? So we're offering a way for those folks to do the same things that they're doing today in a legal and regulatory compliant way, but with no minimums, with instant tradability, and way more flexibility. Still a legal process, still lawyers, but no paper.
What would you say is the typical profile of your user for all three of you? So are they young, older, tech savvy, not tech savvy? Who are they?
I can start. I mean, it's all over the place. I can tell you, since launching our alpha in January, we have that segment of our audience that we know a bit more about. And we've got around 5,000 people from 50, how many countries, Vivian? 53 countries-ish, all over the world. And actually, some of the first folks to sign up were in their early 20s, which I found really encouraging. But all ages, genders, from all over the place. So it's, it really is this diverse set of folks, which, the proof will be in the pudding when the actual dollars start flowing in both directions. But really encouraging to me is this is about democratizing and not having this just be about a bunch of, frankly, white dudes in suits somewhere. It's really a diverse cast of people who have come to sign up to try to get involved.
Very cool.
For us, the sell side's mostly skewing the older crowd because we need people who are equity positive. So homeowners are usually in their 30s and above. That's when they've made enough mortgage payments and they've crossed that 50% line. On the buying side, we're launching in March. But on the buying side, we have a long list of people that want to download the app, and those are usually skewing in the early 20s because it's something, like I said earlier, $1. Yeah, if it goes bad in terms of high demand area, then okay, it's $1. But we foresee people will, initial batch of users that on the buy side will probably put in, $10, $50 or $100, and then once they get experience with it, they see the different areas, then they will start skewing up. And we do have funds, traditional funds that are talking to us to buy, obviously at a bigger ticket price. But in general, our universe of initial users on the buy side will be skewing younger.
Okay. How about you, Piper?
I'm kind of all over the place too, as far as interest is concerned. Now that crypto is becoming more of a household name. I'm getting calls from all over the country and all over the world. How do I do this? How do I do this? So if they're a complete newbie, I just say, get on Gemini and call me in a month when you get verified. And then we'll talk. But like I said earlier, the clients that I've worked with so far have been very savvy tech or crypto investors. They know the space, they know blockchain, they know the ups and downs and the volatility of what Bitcoin is capable of. So we'll see. When we'll see what Bitcoin does this year, and we'll see how many calls I get moving forward.
Right, and while we're talking to you, Piper, where are you seeing, so you're all over the place, usually they're tech savvy, but is there a particular part of the country that we're seeing most of these transactions happening?
Yeah, they're cropping up on both coasts, definitely California and New York. We just saw one in Miami not too long ago, so that's becoming a huge crypto space right now. And Arizona, I never would have thought, but they just passed some laws a week or two ago. They're going to start accepting crypto, which is amazing. I hope that other states follow suit too. And also, I think there was a transaction done in Austin as well. But I'm seeing it more on the coasts.
Awesome. Are there, for the three of you, any regulatory issues to consider?
Yes. Yeah, for sure. I mean, for us, I said we launched a security token blockchain, so we have securities. So there's two key components to this. One, every individual asset that launches on the Swarm platform is its own token, is its own offering, and then has to have the correct regulatory wrapper, if you will, for what that is. So for the first two, we expect there'll be Reg D securities. I say expect because the actual process for any sort of finance buffs in the audience is once the minimum is achieved, then a vehicle is established to actually make that investment, and then that is actually established with the SEC as a security. So it's a process that we are prepared to follow. We've just not reached that sort of piece yet. So every single one of these things is a security in the United States and has to be registered as such. The other piece of the U.S. thing that I touched on earlier is the accredited investor bit. This one's really tough for me on a personal level because it's one of the big things in the country in which I live that stands in the way of us and our mission of connecting people to investing and really democratizing investing. And if you don't know the regulations, you have to have $1 million liquid, meaning like not tied up in your house or anything, access to $1 million. And or you as an individual have made $200,000 a year or more for each of the last 3 years and expect it to continue, or if you're married, $300,000 a year, back and forward, which excludes the majority of Americans from, not just from Swarm, but from investing into any security, which for lack of a better word is shitty. Maybe that is a good word for it. But for us means, we have to really follow the letter of the law because we want to actually be able to, be in business to do these things. That's just in the US. We have 6 other jurisdictions around the world where we've been working as an organization for the past year or so to establish the right regulatory relationships to, same as we want to do here, we want to do this stuff right. And so, imagine a world 6 months, a year from now where there's a real estate fund out of Hong Kong that comes onto Swarm, and we want investors from the US, for example, to be able to invest into that. That's a complex world that we need to weave, but so we've invested in legal, a great law firm and regulatory partners to go do that. So it's a process.
For SmartRE, it's, whenever you're trying to attack or start a new business model, the regulations are always in the back of our minds because you look at the big disruptors like the Ubers and Airbnb. Initially, you can argue that they were perfectly legal, but then a lot of communities and municipalities came up with regulations just for them. So for us, before we started, we spent a tremendous amount of time and resources on legal counsel, and what we're doing is actually not security, but will it change? You look at the SEC and the CFTC have been in talks with Congress, and then other entities have been coming to being to either bring on more rules or more regulations that we will have to follow. And we're always looking at what's happening in DC, but as of now, we're just being patient and trying to execute, and hopefully the government will allow us the leeway that we believe we have right now.
As far as my end, yeah, there are a lot of ICOs out there, some real estate ICOs that want to do cross-border transactions, and I'm not really sure if they understand what that actually means, because every state has its own regulations. And is it going to be a thing where the blockchain just supersedes all of those regulations, just like it did with banking, or are they going to have to comply with each state and their real estate laws? I'm working right now with a startup, cprop.io, and they kind of get that. They get that otherwise you're going to be opening yourself up for all kinds of lawsuits. And they get that they're going to have to comply. They're going to have to comply with every regulation in every state. Other countries, it's a whole different story, but that's kind of what we're up against right now.
Got it. All right, so we have just a few minutes left, but I wanted to save the best question for last, and that is, how do you see in your space the traditional lending institutions in the future?
Since all of mine have been cash transactions, I've been talking to the smaller lenders, and they're all about this. I mean, they can't wait to get that client that wants to do a hybrid, like maybe do a down payment in crypto and then finance the rest. We're kind of working on that right now, but the big guys, not so much. They don't want to touch it. They don't want to have anything to do with it. But it's going to be an interesting year, to say the least.
Yeah, fully agree. I think we were talking before this. 2018 is the year when I think a lot of things will get sorted. I think for traditional lending and if I may, like investing players as well, I think the crypto blockchain world sort of looks a little bit different. I think on the investing side, in the private equity space at least, this is a multi-trillion-dollar thing. Right, like it's $2-point-something trillion in assets under management last year, I believe, in the private equity space. And I honestly believe that prioritizing access and opening these things up to more people can actually significantly grow that number. And we're actually talking to a couple of bigger players in the private equity space about locking arms and trying to do this stuff together. And really, no joke, like have an all ships rise kind of approach and bridge that sort of that world with the new world, which I'm pretty psyched about. From a lending perspective, totally agree with Piper. I think the smaller players are excited to innovate, pivot their businesses, and figure out how to get involved and grow. And the big banks are scared, and they should be. Right, like the stuff you see with locking down credit card purchases and stuff like that. I mean, they are scared because their world is a changing, and where they've always prioritized at the end of the day what's best for the bank. Something that prioritizes access for people is obviously, or I tend to believe over time, going to get more and more support from people. So they're going to have to change things that are long ingrained and very profitable, and that's going to be fun to be a part of.
I think for our company, on the lending side, the mortgage side, we will always complement them, because a lot of people will buy houses without, you hear people buying cash, all cash, but that's great, but I think majority of people cannot do that. And so there'll always be a place for them. Now, are they going to be around in 20 years? That's a toss-up, because I think as the blockchain and the applications are really starting to come on, not just in the coin, the transactional space, there will be new business models, I believe, on the lending side. Now, on the investment side, we have already people who are approaching us, funds, as I mentioned earlier, that want to do products that are based on our product and services. So you can see them growing their revenue, their sales, and we're just complementing them to grow, because, as you said, it is a $1 trillion market, right? And even for us, our niche market, it's the home equity market, which is $150 billion. That's big enough for me. And so people want to to work together and just grow it, because there's tremendous value that has to be unlocked.
Awesome, thank you. So I am getting the red dots blinking at me that we're out of time, but I'm also looking at, I think we have till 12:10. So I'm going to steal 2 minutes, if that's okay, and just open it up to the crowd if you've got any major questions. Why don't we start here?
Yeah, this is for Chris. I'm just a little, I guess not confused, but kind of what you were saying about liquidity, for allowing liquidity with the security tokens. It kind of seems anti what the SEC wants with lockup periods pursuant to Reg D offerings. So I'm just wondering how you provide that liquidity. And then why you guys chose to use ERC20 standard tokens, which are typically used for utility as opposed to like an ST20 protocol, and how you differ from companies like 10 who are also tokenizing actual assets, like a Swiss company that's doing that.
Cool. So that's like 6 questions. We should.
Yeah.
No, it's awesome, man. No, and great question. So let's chat after about some of that stuff, so I don't monopolize the whole time. But I think the first piece around lockup periods and liquidity is a great question. And the way that we I guess provide liquidity in that context is when you invest into one of these opportunities, one of these funds on Swarm, you're converting whatever your currency is into a token, these dollar pegged tokens, right? So you own those in the same way that you own a share of stock. Those represent, in this case, fiat U.S. dollars that are converted and supplied to those assets to go off and do whatever they're going to do with their business, right? In the fiat piece of that, there's capital that is locked up. There's the sort of the proper regulatory paths that follow, and then back on the platform, there's a token that you own. And if you want to trade that token to somebody else on the platform tomorrow who wants to buy it from you, there's a market for that. And then within that realm of investor accreditation and KYC AML, we're able to provide that, like sort of that instant transfer and tradability, while also on sort of the other side of the wall, having things operate the way that traditional capital operate. Maybe one quick other, but yeah, let's chat more. On the token standard stuff, so the Swarm token itself is a utility that we use to operate the network. It's gas, it's incentives, it's governance. And then actually the securities are actually done on a Stellar-based blockchain that we built with SRC20, which is actually, from what I'm aware of, the only live and actively used security token standard. Although I'm curious to see when SC20 is actually deployed, what we can do, and hopefully we can work together with those guys to do some awesome things.
Great
Great questions,
Chris.
Sophie.
So I'm going to limit it just to 2 more questions, and please, we'll appreciate the question, but if it comes to any of the technical, maybe we'll talk after. Does anybody have a question for Piper? Okay, yes.
Just a thought for you. You sound like you're a lightly regulated stock market with no circuit breakers. You sound like you're a real estate investment trust that's tokenized, low friction. I think you probably tend to agree with that. If I were you, strong suggestion, having had a lobbying firm for working for my interests a while back, start today, lobby. Take people out to lunch at the Capitol Hill Club every Wednesday, 6 o'clock, unfailing. If the administration changes, substitute Democratic National Club. I'm just saying.
Yeah.
That's a good idea. Okay.
Yeah.
Thank
Here,
you.
here.
Thank you. Question for Chris, and then we need to wrap up. Does anybody? This is for Chris? I'm sorry, for Lloyd. Question for Lloyd.
Looking at my company specifically, I don't think we would exist without the blockchain. Because why would anybody trust a small company, right? Back in the day when eBay first started, this is before most of your time, when eBay first started, there was a joke going around that if you bought the first generation Xbox, you're going to end up with a box of rocks, right? Because you don't know what you're getting, right? And then eBay had to put on safeguards, right? So they consider it after the fact. It's like, hey, this is a great idea. The web is new. We're going to just put an auction site, and if you build it, people will come. And people, there'll always be early adopters who are, blockchain, no blockchain, HTTP, or no HTTP, they'll be there. But for the blockchain-specific world, I think the trust in the trusted system is very important. Now, having said that, the blockchain is a wonderful technical construct, but a lot of what you write into it, that could be manipulated, and that's a social issue. And that we spent tremendous amount of time, and that's why we have insurance and financial products to back up our users, especially on the buy side.
Great. Thank you, guys. Thank you so much. Eric, you want to talk a little bit about logistics? Thank you, Piper, Chris, and Lloyd. Really appreciate it.